Stop what you're doing, put down your coffee, close the other tabs, lock the door. Because what I am about to tell you is going to change the way you look at the world forever. We have spent years, decades, being called conspiracy theorists. We have been laughed at by the mainstream media. We have been mocked by the bankers in their $1,000 suits. We have been told that silver is a pet rock, that gold is a barbarous relic, and that the Federal Reserve has everything under control. They told us that the price of silver is determined by supply and demand. They told us that the markets are free, fair, and transparent. And they told us that the elites, the people who run this world, the people who fly on private jets to islands you can't find on a map, don't care about precious metals. Ladies and gentlemen, Asian guy here, they lied. And today we have the receipts. We don't just have a theory anymore, we have the smoking gun. And it didn't come from a whistleblower. It didn't come from a leaked government report. It came from the grave. It is Wednesday, February 11th, 2026. And while the world is distracted by the chaos in the Middle East, or the price of oil, or the latest celebrity scandal, a document dump has just hit the dark web that is sending shockwaves through the highest levels of the financial system. We are talking about the Epstein files, but not the files you're thinking of. Everyone is focused on the flight logs. Everyone wants to know which politicians went to the island. Everyone wants to know who is compromised. And yes, that is important. That is justice. But there's another story buried in those terabytes of data. A story that the financial media is terrified to touch. Because it turns out Jeffrey Epstein and Ghislaine Maxwell weren't just running a blackmail operation. They were running a hedge fund. They were managing money for some of the wealthiest, most powerful, and most corrupt people on the planet. And when you look at what they were buying, when you look at what they were actually doing with that blood money, it paints a picture that confirms everything we have ever said about the silver market. We have uncovered a series of emails between Jeffrey Epstein, Ghislaine Maxwell, and a high-level French banker identified only as Bernard. Now, Bernard is a common name, but in the context of global finance and in the context of Epstein's circle, we have our suspicions about who this might be, but let's focus on the content. These emails date back to the early 2010s, right after the 2008 crash, right when silver hit $50 the last time, and they reveal a level of sophistication, a level of market knowledge, and a level of cynicism that is truly breathtaking. In one email, dated November to 2011, Bernard is advising Epstein on portfolio allocation. This is the smart money talking to the smart money in private. No cameras, no CNBC interviews, just the raw truth. And what does Bernard say? Does he tell Epstein to buy treasury bonds? Does he tell him to buy the S&P 500? Does he tell him to trust the US dollar? No, he tells him to buy silver. Listen to these words. Burn them into your brain. Bernard writes to Epstein, I'm fully convinced that a squeeze is possible if one can take delivery of 100% of the futures contract. Let me repeat that. A squeeze is possible if one can take delivery. They knew. 15 years ago, they knew. They looked at the COMEX. They looked at the paper leverage. They looked at the ratio of paper ounces to physical ounces. And they didn't see a market. They saw a fraud. They saw a Ponzi scheme that was vulnerable to a mathematical attack. Bernard explicitly lays out the strategy. You don't just buy the contract to speculate. You buy the contract to break the bank. You buy it, and you demand the physical metal. He knew that if a whale, someone like Epstein or the billionaires he represented, stood for delivery on 100% of their position, the bullion banks would default. The system would crack. The price would go vertical. But it gets better, or worse, depending on how you look at it. Bernard goes on to give a price target. Now remember, in 2011, silver had just crashed from $50 down to $30. The media was telling everyone the bubble had popped. They were telling retail investors to sell and go away. But what was the elite telling Epstein? Bernard writes, I think that silver without undue speculation will end the year at $60 and that its inflation-adjusted value is $150. $150? That is the number they were whispering in the Hamptons. That is the number they were discussing on the private jets. They knew, even back then, that the real price of silver, the price if you stripped away the manipulation, the spoofing, and the paper suppression, was triple digits. They knew the inflation numbers were fake. They knew the CPI was a lie. They calculated the inflation-adjusted value themselves, and they came up with $150. Think about that. If the real value was $150 in 2011. What is it today? What is it after the trillions of dollars printed for COVID? What is it after the bailouts? What is it after the debt hit $38 trillion? If it was $150 then, it is $500 now. And they didn't just talk about it, they acted on it. The leaked trade logs attached to these emails show Ghislaine Maxwell executing massive buy orders. We are seeing line items for First Majestic Silver. We are seeing an accumulation of 3 million units. Why First Majestic? Because Keith Neumeyer is the only CEO in the industry who has openly fought against the manipulation. He's the only one who has threatened to withhold supply. Maxwell knew this. Epstein knew this. They weren't buying an ETF. They weren't buying paper silver. They were buying the miners and the physical metal. They were positioning themselves to own the source of the supply. This completely destroys the narrative that gold bugs are just crazy people in tinfoil hats living in their basements. The most connected people on Earth, the people who had dirt on presidents, princes, and prime ministers, were gold bugs. They were silver stackers. They were betting against the Federal Reserve. They were betting against the US dollar. And most importantly, they were betting on a squeeze. So ask yourself, why? Why would Jeffrey Epstein, a man who could blackmail the world, need silver? Because he knew the ultimate secret. He knew that power isn't just about blackmail. It isn't just about secrets. True power is autonomy. He knew that the fiat system is a control grid. He knew that if you hold your wealth in dollars, the government can freeze it. The banks can seize it. But if you hold physical silver, if you hold gold, you are outside the system. You are sovereign. And he knew that the system was mathematically doomed to fail. He saw the debt. He saw the derivatives. He knew that eventually the music would stop. And he wanted to make sure that when the music stopped, he was holding the only chair that mattered. The email ends with one final prediction. Bernard writes, "It is also likely that the gold to silver ratio will fall under 20. Under 20. Right now, the ratio is hovering near 90. To get to 20, silver has to outperform gold by a factor of 4. If gold stays at 5,000, silver goes to 250. If gold goes to 12,000, like we discussed yesterday, silver goes to 600. This is the endgame scenario. This is the wealth transfer of the millennium. And they were positioning for it 15 years ago. This leak changes everything. It validates every single thing we have been fighting for. The silver squeeze isn't a Reddit meme. It isn't a YouTube trend. It is a strategy that was developed by the financial elite to destroy the banking cartel and seize the real assets of the world. But here's the difference. Epstein and Maxwell wanted to do it to enrich themselves. They wanted to be the kings of the ashes. We want to do it to free ourselves. We want to do it to protect our families. But here is the terrifying part. If they knew this in 2011, and they were buying, where did the metal go? Where are those 3 million shares of First Majestic? Where are the physical bars they took delivery of? They are gone. Hidden in trusts, buried in vaults in the Virgin Islands. They front-ran us, but they were too early. They predicted the squeeze, but they didn't account for the sheer power of the manipulation machine to keep the price down for another decade. But now the machine is broken. Now the supply is actually gone. The thesis that Bernard wrote in that email, the thesis that a squeeze happens when you take 100% delivery, is finally coming true. But it's not Epstein taking delivery. It's China. It's India. It's you. And that brings us to the breaking news of the day. Because while we are reading history in these emails, the future is slamming the door in our faces. The squeeze that Bernard predicted is happening right now. And the response from the establishment is exactly what you would expect. They aren't defaulting. They aren't admitting defeat. They are changing the rules. They are locking the doors. If you thought the manipulation was bad when they were spoofing the price, wait until you see what they do when they simply ban you from buying. We need to go to Shanghai. We need to talk about the order that just came down from the Communist Party. Because what Epstein predicted, the inability to get metal, just became official government policy in the largest silver market on Earth. But while the ghosts of the past are whispering about a squeeze and leaked emails, the reality of the present is screaming it from the rooftops in Shanghai. The elites like Epstein and Maxwell were positioning themselves years ago because they knew the math would eventually break. They knew that a day would come when the physical metal would simply run out. They knew that the paper market, the comics, the LBMA, the futures exchanges, was writing checks it could not cash. And today, on Wednesday, February 11th, 2026, that check just bounced. We need to shift our gaze from the Caribbean to the East China Sea. We need to look at the Shanghai Futures Exchange, the beating heart of the global physical silver market. Because while you were sleeping, the Chinese Communist Party issued a directive that effectively ends the free market for silver in the world's second largest economy. This isn't a rumor. This isn't a leak. This is an official rule change that was just posted to the exchange's website, buried in technical jargon that most analysts are too lazy to read. But we read it, and the implications are terrifying. Starting on the last day of this month, February 28th, the Shanghai Futures Exchange has implemented a new allocation policy for silver delivery. The rule is draconian in its simplicity. It states that any market participant who does not hold a specific government-approved hedging quota for the near delivery month will receive 0 lots in the delivery allocation. Let me be crystal clear about what those two words mean. 0 lots. It doesn't say reduced allocation. It doesn't say delayed delivery. It says zero. This means that if you are a speculator, you get nothing. If you are a family office trying to protect your wealth, you get nothing. If you are a private investor who bought a futures contract thinking you could stand for delivery and take the metal home, you get nothing. You will be forced to settle in cash. You will be forced to take paper yuan, which is being printed by the trillions instead of the silver you paid for. The window to exchange fiat currency for hard assets in China has just slammed shut for the public. This is rationing. There is no other word for it. In a functioning market, price solves the shortage. If there's not enough silver, the price goes up until people sell. But China isn't a functioning market anymore. It is a command economy preparing for war. They are not allowing the price to rise to clear the market because that would signal weakness. Instead, they are rationing the supply. They are reserving every single ounce of physical silver exclusively for the industrial giants, the solar panel manufacturers, the missile defense contractors, the electric vehicle companies. These are the entities with hedging quotas. These are the entities that the state deems critical. Everyone else, you are deemed non-essential. Your wealth preservation is not a priority for Beijing. Think about the signal this sends to the rest of the world. The Shanghai Futures Exchange is the most liquid physical market on the planet. Historically, it has been the place where metal actually moves. Unlike the COMEX in New York, which is a casino where 99% of contracts are settled in cash, Shanghai was where you went to get metal. And now, they are telling you that the cupboard is bare. They're telling you that the inventory levels are so critically low that they cannot afford to let a single ounce leak out into private hands. They're terrified of a bank run on silver. They know that if the Chinese public, all 1.4 billion of them, decided to convert even 1% of their savings into silver, the industrial supply chain would collapse in 24 hours. So they preempted it. They banned the public from the delivery window. This is the ultimate confirmation of the shortage. You don't ration sand in the desert. You don't ration water in the ocean. You only ration things that are running out. You only ration things that are vital for national survival. And by implementing this zero lots rule, China has just admitted that silver is their most critical strategic asset. They are effectively nationalizing the stockpile without saying the word nationalization. They are saying, this silver belongs to the state and its industries. Hands off. Now, imagine you are a wealthy individual in Shanghai right now. You see this rule change. You see the government locking the vault doors. Do you think, oh well, I guess I'll just keep my money in the bank? No, you panic. You realize that if you can't get silver through the official exchange, you have to get it on the black market. You have to get it through jewelry. You have to get it through smugglers. This rule change is going to ignite a firestorm of demand in the underground economy. The premium on physical bars in the streets of Shanghai is going to explode. We are already hearing reports of premiums hitting 50% over the spot price in the shadow market. Because when the government says you can't have it, everyone suddenly wants it. And what happens when this news filters out to the West? What happens when the traders in London and New York realize that the world's factory is out of raw material? It means that China is going to stop exporting finished silver products. It means they are going to start importing even more aggressively. It means they are going to suck the global supply chain dry to feed their protected industries. The vacuum we talked about yesterday, the arbitrage draining the West, just got a turbocharger. China isn't just buying for profit anymore, they are buying for survival. This is the squeeze that Epstein's banker predicted, but it doesn't look like a vertical line on a chart yet. It looks like a closed door. It looks like a force majeure notice. It looks like a zero lots allocation statement. This is how a market dies. The price on the screen might still say $72 or $80, but that price is for a phantom product. It is the price of a picture of silver. If you want the real thing in Shanghai today, you cannot get it. The price is effectively infinity for the public. And while China is locking down its borders and rationing its supply, another giant has woken up. While Beijing is playing defense, another Asian superpower is playing offense. They aren't rationing. They are gorging. They are buying so much silver that they are single-handedly rewriting the supply-demand balance of the planet. We need to look south. We need to talk about India. We need to talk about the 13.5 million ounces that just vanished into the subcontinent. But while the doors are slamming shut in Shanghai, while the government bureaucrats in Beijing are frantically trying to ration every last gram of silver to keep their factories running, a different kind of panic is taking hold across the Himalayas. A panic of accumulation. A panic of greed. We have to talk about the other giant in the room. The sleeping giant that has just woken up and decided to eat the world's silver supply for breakfast. We have to talk about India. If China is the dragon hoarding gold and silver in secret government vaults, then India is the elephant trampling the global market in broad daylight. And right now the elephant is thirsty. We have just received the official data for silver imports and ETF holdings in India for the month of January 2026. And the numbers are not just big, they are not just bullish, they are system-breaking. They are the kind of numbers that make mathematical models explode. In just the first 31 days of this year, Indian silver ETFs, the investment vehicles used by the middle class and the wealthy alike to store value, added a staggering 13.5 million ounces of physical silver to their vaults. 13.5 million. Let that sink in. That is roughly 420 tons of metal in 1 month in one country. And remember, this is just the ETFs. This doesn't even count the jewelry market, the silverware market, or the massive underground cash market that operates in the bazaars of Mumbai and Delhi. This is purely the financial demand. But you cannot look at January in isolation. You have to look at the trend. You have to look at the momentum. Because this wasn't a one-off event. This wasn't a fluke. This came directly on the heels of a record-breaking December in 2025, where Indian investors added 23 million ounces to their stockpiles. 23 million. Do the math with me. 23 plus 13.5. That is 36.5 million ounces of silver removed from the global market in just 60 days. 36.5 million. Do you understand the scale of that drain? Global silver mining production, the actual amount we dig out of the ground, is roughly 800 million ounces a year. That means in just 2 months, Indian investors alone consumed nearly 5% of the entire world's annual mining supply. Just the investors, just the ETFs. If you annualize that rate, if they keep buying at this pace for the rest of 2026, India alone would consume 220 million ounces of investment silver. That is more than a quarter of the planet's supply. And that leaves exactly 0 ounces for the rest of us. 0 for Tesla, 0 for Apple, 0 for Samsung, 0 for the US Mint, 0 for you. Why is this happening? Why is India suddenly buying silver like it is going out of style? Because they are smarter than we are. Because they understand history. In the West, we look at the price of silver dropping to $72 or $80 and we get scared, we sell, we think something is wrong. In India, they look at the price drop and they see a gift, they see a sale. They have a cultural memory of currency collapse. They know that paper rupees, paper dollars, paper anything eventually returns to its intrinsic value, 0. But silver? Silver is Lakshmi. Silver is wealth. Silver is eternal. And right now, the Indian economy is booming. They are building solar farms at a rate that rivals China. They are building electronics factories to replace the ones leaving Shanghai. They need the industrial silver. But more importantly, the new middle class in India, hundreds of millions of people, are waking up to the global fiat crisis. They are seeing inflation eat their savings. They are seeing the geopolitical chaos. And they are doing exactly what Bernard told Epstein to do 15 years ago. They are taking delivery. They aren't buying paper promises. The Indian ETFs are legally required to hold the physical metal. When you buy a unit of the silver ETF in Mumbai, a bar has to move into a vault in London or Zurich or Gujarat. It has to be audited. It has to be real. So every time an Indian housewife buys a few shares on her phone, a chunk of metal disappears from the LBMA in London. A chunk of metal disappears from the COMEX in New York. The vacuum we talked about, the arbitrage that is sucking metal from west to east, is being powered by 1 billion people who know the value of hard assets. This creates a terrifying tug of war in the global market. On one side, you have China. They are terrified of running out. They are rationing. They are implementing zero lots rules. They are locking the doors to keep their silver inside. On the other side, you have India. They are terrified of missing out. They are hoarding. They are buying 13.5 million ounces a month. They are kicking the doors down to get more silver inside. And in the middle? In the middle is the COMEX. In the middle is the US dollar. In the middle is the price mechanism that says silver is worth $72. This mechanism cannot survive this pressure. You cannot have the 2 largest populations on Earth fighting over a finite resource while the paper price says it is abundant. Something has to break. The COMEX cannot supply both the Chinese factories and the Indian investors. The math doesn't work. The vaults in London, which supply both markets, are being drained from both ends. China is taking the industrial bars. India is taking the investment bars. And the West is left holding the empty bag. This is why the paper smash to $80 was the greatest strategic blunder in financial history. By lowering the price, the Western banks thought they were saving the dollar. Instead, they just subsidized the Indian accumulation. They made it cheaper for India to buy 36.5 million ounces. If the price had been $150, maybe India would have bought less. But at 80, they bought everything. They cleared the shelves. And this brings us back to the Epstein emails. Remember what Bernard said? A squeeze is possible if one can take delivery of 100% of the futures contract. He thought it would take a billionaire to do it. He thought it would take a whale like Epstein. He didn't realize that it wouldn't be one man. It would be a nation. India, effectively, is the whale that Bernard predicted. They are taking delivery of millions of ounces every week. They are acting as a single massive entity that is cornering the market, not through manipulation, but through sheer, overwhelming physical demand. And this demand confirms the thesis. It confirms that the squeeze isn't just a theory discussed in dark rooms by corrupt elites. It is a geopolitical reality playing out in real time. The elites knew it was coming. The Epstein emails prove that, but they couldn't stop it. They could only delay it. And now, with China rationing and India hoarding, the delay is over. The dam is breaking. And if you want to know where this goes next, if you want to know what happens when the dam finally bursts and the water rushes through, you have to look at the technicals. You have to look at the charts that the institutional analysts are secretly passing around their trading desks. They aren't looking at $100 anymore. They aren't looking at $200. They are looking at a supercycle. They are looking at a move that mirrors the 1970s, but on a scale that will melt your calculator. We need to talk about $1,000 silver. We need to talk about the cup and handle that has been forming for 45 years. So let's put the pieces of the puzzle together. Let's connect the dots between a dead billionaire's email inbox and the panic happening in China right now. Because when you see the whole picture, it becomes terrifyingly clear that the conspiracy theory of 2011 has become the government policy of 2026. Look at what Bernard wrote to Jeffrey Epstein 15 years ago. He didn't say, buy silver because it's shiny. He said, a squeeze is possible if one can take delivery of 100% of the futures contract. He identified the fatal flaw in the system. He knew that the entire precious metals market was a fractional reserve scam. He knew that for every 500 ounces of paper silver traded in New York and London, there was only 1 ounce of physical metal in the vault. The banks were betting that nobody would ever ask for the real thing. They were betting that investors would be happy trading paper receipts back and forth forever. But Bernard asked the dangerous question, what if we call their bluff? What if a whale stood up and said, I don't want the cash, I want the metal, all of it. He predicted that if that happened, the exchange would break. The price would go vertical. The banks would default. Well, look at Shanghai today. What is the zero lots rule? It is the exchange admitting that they cannot deliver. It is the exchange admitting that the demand for physical metal has exceeded the supply so drastically that they have to change the rules to prevent a default. They are effectively saying, Bernard was right. They are confirming that the delivery is the kill switch. And because they can't survive the kill switch, they disconnected the button. But here is the irony. Bernard thought the whale would be a person. He thought it would be Epstein or a hedge fund manager. He was wrong. The whale isn't a person. The whale is India. India is doing exactly what the email predicted. They are taking delivery of 100% of their contracts. When they buy 13.5 million ounces, they don't roll it over. They don't settle for cash. They take the bars. They put them on a plane. They remove them from the system. So we have the perfect storm. We have the leak, proving the elites knew the vulnerability. We have the ban in Shanghai, proving the vulnerability has been exploited. And we have the buyer in India actively exploiting it. And this validates everything. The squeeze isn't coming. The squeeze is here. The mechanism is breaking in real time. And if you want to know where the price goes when the mechanism finally snaps, when the paper price is forced to meet the physical reality, you have to look at the supercycle. You have to look at the chart that says $1,000 is not a fantasy, but a mathematical certainty. But if you want to understand where this is going, if you want to know the destination of this train before it leaves the station, you cannot look at the 1-minute chart. You cannot look at the daily volatility of $72 or $80. You have to zoom out. You have to zoom out so far that the last 45 years fit on a single screen. Because when you do that, you don't see a crash. You see the single largest technical formation in the history of financial markets. We need to talk about the supercycle. Institutional analysts, the guys who advise sovereign wealth funds and central banks, are quietly circulating a chart that is terrifying in its implications. It is called the cup and handle. But this isn't a normal cup and handle that forms over a few weeks. This one has been forming since 1980. Look at the history. In 1980, silver hit $50. That was the left side of the cup. Then we had a 30-year bear market, the bottom of the cup. In 2011, silver hit $50 again. That was the right side of the cup. And for the last 15 years, from 2011 to 2026, we have been forming the handle. We have been consolidating. We have been shaking out the weak hands. And now we have broken out. When a pattern takes 45 years to build, the energy release when it breaks is not linear. It is exponential. The technical target for a cup and handle of this magnitude is not $100. It is measured in multiples. If you simply project the depth of the cup from the breakout point, the conservative target is $300. But if you adjust for inflation, if you look at the real value of the 1980 high in today's debased dollars, the target becomes $1,000. This sounds impossible to the average person, but history tells us it is inevitable. We are witnessing a repeat of the 1970s. Go back and look at the gold chart from that era. Gold went from $35 to $195. It went up 5x, and then it crashed. It fell from 195 all the way back down to 100. It lost 50% of its value in the middle of the bull market. The media called it a bubble. The retail investors sold. They thought it was over. But that was just the midway pause. From that low of $100, gold then went vertical to $850. It went up 8x after the crash. We are in that exact moment right now with silver. The move to $121 in January was the initial surge. The crash to $80 is the midway pause. It is the volatility designed to buck you off the horse before the real run begins. The smart money knows this. Epstein knew it in 2011. The Indians know it today. They aren't scared of the drop. They are praying for it. Because they know that the next leg up isn't going to be a slow grind. It is going to be a vertical parabolic repricing that happens overnight. We are looking at a 6 to 8 year super cycle where silver ceases to trade like a commodity and starts trading like a monetary crisis. When the zero delivery reality in Shanghai meets the unlimited demand in India, the price mechanism will snap. We will wake up one morning and the price will be $200, then $400, then $1,000. This is the math of a broken system finding equilibrium. The chart is screaming it. The fundamentals are screaming it. And the elites have been positioning for it for a decade. So the question is not, will it happen? The question is, will you be holding the bag of fiat or the bag of metal? We have one final warning. We need to give you the verdict on what you need to do today, because if Shanghai is closed, New York is next. So here's the verdict. We have peeled back the layers of this global financial onion, and what we found at the center is a market that is not just broken. It is closed for business. We started with the ghosts of the past, Jeffrey Epstein and Ghislaine Maxwell, and the leaked emails that prove the elites knew the game was rigged 15 years ago. They knew the real value of silver was $150 back then, and they were positioning for a squeeze that would break the banks. We moved to the present reality in Shanghai, where the zero lots rule has officially banned the public from taking delivery. The second largest economy on earth has just told its citizens, the metal is for the state, not for you. And we looked at the massive, undeniable demand from India, where a nation of billion people is draining 13.5 million ounces a month, effectively acting as the whale that Epstein predicted. You need to understand the gravity of this situation. The squeeze is no longer a theory. It is a government policy. When the Shanghai Futures Exchange says zero delivery, they are telling you that the physical shortage is critical. They are telling you that they have run out of buffer stock. And if Shanghai is dry, what do you think is happening in London? What do you think is happening in New York? These markets are connected by a series of tubes. If one pipe runs dry, the pressure collapses in the entire system. The contagion from Shanghai is already moving west. The premiums are rising. The delays are lengthening. The dealers are starting to say, we can get it to you in 6 weeks instead of we can ship it tomorrow. This leads to the most important question you will ever ask yourself as an investor. If you cannot get delivery in Shanghai today, how long until you cannot get delivery in New York? How long until the COMEX declares force majeure? How long until the bullion dealers put up a sold out sign on their websites? It happened in China overnight. It happened with the stroke of a pen. One day you could buy silver, but the next day you got zero lots. Do you think the United States government will be any more polite? Do you think they will give you a warning? No, they will do exactly what China did. They will change the rules to protect the strategic industries and screw the little guy. You are currently in a race. You're not racing against other retail investors. You're racing against India. You're racing against China. You are racing against the ghost of Epstein's strategy. They're all trying to get through a door that is rapidly closing. And the prize for winning this race is financial sovereignty. The penalty for losing is being stuck with worthless paper currency while the real assets go to the moon. The smart money told us in 2011 that the real value was $150. Adjusted for inflation, that is $500 today. The chart says $1,000 in the supercycle, but the price on your screen says $80. That gap, that massive yawning canyon between price and value is your opportunity. But it is an opportunity with an expiration date, and judging by the panic in Shanghai, that expiration date is now. Do not wait for the price to dip. Do not wait for the perfect entry. Do not wait for the news to tell you it's time to buy. By the time the news tells you, the zero lots rule will be in effect here too. Get the metal in your hand, get it out of the system. Become your own central bank. This is John Ag. The leak is out. The delivery is zero. The squeeze is on. Stack now,